So good morning, everyone. It's wonderful to see so many faces, some regular faces and some new faces, which is brilliant. I think we have over 100 people registered to today's event. And not just, as I've said, not just the regular attendees of Impact Women's Network, we actually have the Rising Wise alumni also joining us. They usually meet at lunchtime today. But Shima has invited that whole group to join us at today's session too. So if you are from that group, you're very welcome. So as I said, there's around 100 people booked on for today's session, and people are also going to be able to hear the session as a recording as well. There's around about 900 people now involved in Impact Women's Network, and the whole idea behind the group is about how we can raise visibility of a whole range of topics and instigate greater change by working together. So throughout the whole of this year, we're focused on the Sustainable Development Goals, and today's session is going to be on sustainable finance and how that actually we can be involved in that and how it can be affected. Now, one of the key things about Impact Women's Network is it's a very organic network. So it's founded by Shima Barakat and myself, but actually it's run by the members and for the members. We don't charge a fee. It's very organic. It's all about just relationships and the networks that we build. And so today's session came about from the Impact Women's Network annual event, where there were a group of people having a discussion around sustainable finance. And Roxanne kind of put her hand up and said, actually, I feel really passionate about this and I really want to run a session. So I love the idea of today's session because basically I don't have to do very much. Roxanne is going to be the host for today and is going to be introducing our two speakers. So we've got Lillian Toyin, and I will let Roxanne make all of those introductions. And we're really grateful for the three of them actually taking hold of this as a discussion topic and bringing it to you today. So without further ado, I'm going to put myself on mute and I'm going to hand over to Roxanne.
Thank you, Faye. Hi, everybody. Nice to see you in one way or another. And hopefully we see each other in person in the not too distant future. And sustainable finance. Why is the executive director of CamCycle, the Cambridge Cycling Campaign, hosting a session about sustainable finance? And I will put my hands up and say, I don't actually know very much about this topic at all. And that's why I put my hand up, because it's something that I want to know more about. And I thought, well, maybe it would be good for people without so much knowledge to help host this, because I understand the level of knowledge might be quite low for me and for others. And we're all in this together, so we can all ask those questions that maybe we've just been sitting on for a while. But then I was reflecting on this and I realized maybe I do have a bit of knowledge. I actually worked in a bank for nearly 5 years when I was 18, all the way through university. And I was even thinking about, well, how did I make banking decisions when I was younger? And really it just came down to, this was the bank down the road. It was the closest to my house. So that's where I started banking, and that's the bank I ended up working for. But maybe we need to be a bit more thoughtful about some of those decisions now. I also remember when I first started paying superannuation, or what we would call in the UK our pension, and then realizing that my superannuation fund was investing in organizations that I wasn't very happy about. I thought, well, why is my money paying for these businesses to do things that I don't agree with? I'm a bit uncomfortable about this, but at that time I had no option in changing my superannuation provider. That was decided by my organization. But luckily we're starting to get more control over what happens here. So at the International Women's Network, the Impact Women's Network, AGM last year, I spoke about theory of change, and that was relevant to my work in cycling campaigning. And I presented a system dynamics model. And I've actually been reflecting on that model now and thinking about, well, where is my money flowing around in this model and what is it doing? And then realizing, well, actually in these models, you can get these virtuous circles where a good thing creates another good thing, which invests back in the good thing and then back in the good thing. And I would love to know how the decisions I make with my own money could start doing these virtuous circles and helping our world in better ways. And I think this is more timely than ever as we have to start looking at, designing perhaps a new economy as we emerge from this pandemic. So now is the time to learn and be really conscious about what our money is doing as things start to change. So this is literally the absolute lack of knowledge I have here. All I know is I want my money to do something good, and how can it do it? And that is why we have some experts to come and tell us more. Before I do introduce our wonderful guests, I just want to point out that the session today is for general information, and this isn't intended to address any of your particular requirements. What we're sharing today, it doesn't constitute advice or recommendations, and you shouldn't rely on that for your own financial and investment decisions. You need to obtain appropriate independent advice before you make those decisions. But what I hope you get from today is the foundation to start asking the right questions and to get an idea of knowing what you might not know, so that you can go and get that advice. But as I remember from my 5 years in the bank, we must make these disclaimers. So you're responsible for your own financial decisions. Now, first up today, we have Lily Thompson from Share Action. And I've known Lily for quite a while, but we've never had a proper conversation about this. I'm so excited to hear from you today, Lily. So Lily is the head of networks at Share Action, and Lily works with pension savers, AGM activists, civil society organisations, charitable asset owners and universities to build the grassroots movement for sustainable investment. So Lily and her team help to build communities who want to take ambitious action on advocacy, policy and engagement across capital markets. So that includes coordinating the Charities Responsible Investment Network, and also Lily's new project, the Responsible Investment Network of Universities. So really what I take from what Lily does is she helps us force our organizations to be more responsible with their own investment decisions, but I think Lily can explain it better. And Faye, should I introduce Toya now or before she speaks?
That's entirely up to you.
I'll introduce Toya now. Right, just so that we can flow straight through. So Toya Miller is from Triodos Bank in the UK, and I've been really interested in learning about this bank for years now after my friend just always keeps going on about how great they are. She works in sustainable finance, and so now is my time to finally learn more. So Toyin is the Senior Relationship Manager at Triodos Bank UK, which supports socially minded organisations, including social enterprises and charities, to secure affordable and repayable finance. And before working in the social investment sector, Toyin worked in financial services with roles in corporate banking at Lloyds Bank and Nationwide Building Society. And I'd be quite interested to see what the differences might be between the two sectors. And Toyin, I'll let you talk about the rest of your experience, but I will say that in 2019, Toyin was included in NatWest's WISE 100 list of inspiring and influential women in social enterprise, impact investment and mission-driven business. So we've got some wonderful and inspiring women today. And Lily, I will now hand it over to you.
Thank you, Roxanne, and thanks so much for having me. It's great to be here. Pity not to be in the room all together as ever, but I think we're increasingly getting used to this Zoom format. So I'll say a little bit very briefly about who I am, although I think Roxanne covered it very elegantly. It's funny to be here and not talking about something cycling related, which is normally what Roxanne sort of roped me in some way or other to get involved with. So we are finally having that conversation, although with a slightly larger audience than we might sat in a pub or a cafe or something like that instead. I head of networks at a charity called Share Action, and Share Action exists really to make the global investment sector responsible for its impacts, whilst at the same time mobilising its power to address the challenges that we all face. And we're a sort of funny mixture of a charity, a campaign group, a think tank, and a kind of policy body. So we really span that line between being relatively challenging and radical towards the investment sector and being very collaborative and supportive of elements of it. And I'll speak to different angles of that, and I'm very happy to talk more about that kind of interesting spectrum that that we operate on. And my role is really coordinating our movement building side. And the focus there is identifying a range of different pressure points within the system to focus on. And as Roxanne mentioned in my intro, that includes working with individuals, and that's where I'll sort of pay most of my attention today. But actually the majority of my personal delivery work is with charitable foundations and other charities with sort of big pots of assets, with universities, including the University of Cambridge, actually, for those of you based in town too, and also with a range of civil society organisations across Europe. But I'll focus today on the individual side. I'm very happy to go into more detail about those asset owners in questions or later on. And I'm really assuming absolutely no knowledge here. I think what's best and most important with this sort of conversation is to really strip back to basics, because so much of the discussion within finance quickly becomes very full of jargon, very hard to follow, and often just turns people off immediately. So wave your hands or put something in the chat. I can't see all of you, but I can see some of you if I do start using any jargon that isn't clear to you, and I'll step back and look through that and give you a clearer definition. But to start, I wanted to ask a question of all of you. Could you put your hand up if you think you own shares in BP and Shell? I can see you. I don't think you can all see each other. I see lots of smiles and slightly bemused faces, and a few hands in the air and many hands not in the air. I'll come back to that one. So hold that thought. An interesting range of hands doing this, and confused looks for those of you who can't see each other. Could I have the next slide, please, Carol? Thanks. So if you're working, you're probably paying into a pension. And I think the image that most people have in their heads when they think about a pension is either this one, if they're an optimist, or sort of grungy grey building with not very much content or detail. But pensions aren't just for retirement. They don't just sit there until the end of your life. They're invested in companies directly right now to appreciate in value. And sometimes those aren't investments that we'd be fond of. At Share Action, we often say that we think of the pension sector as dangerous and exciting, which I think is the kind of thing that gets some people really interested. It sounds terrifying to other people, but I do think it's important to think about it as a sector which is shaping everything around us. Could I have the next slide? So this is an actual manifestation of your pension. So you wake up in the morning, you make a cup of tea. Twinings is a company you're very likely to be invested in. There we are, Roxanne, me too. It's actually Yorkshire tea, which is slightly different for me. But anyway, you might commute through this station. I'm very happy not to be doing so at the moment. That station was built largely by pension fund money. Might come back in the evening, watch some TV. ITV and many other TV channels are, of course, also companies that your pension would be invested in. Next slide, please. And pensions are powerful. About half of all investments made in the UK come from our pension money. And we own those companies indirectly through our pension funds. They're dependent on our savings in order to be able to go about their day-to-day work and to finance new projects. So in short, our pensions build the world around us. And with 45 million people in the UK saving for a pension, that's a pretty powerful potential impact on the world. And Share Action as a charity, and also the individual supporters and activists that we work with, believe that we should have a voice in the type of world that our money is building. Next slide, please. So what world could your money be building? Let's start with the optimistic side of things. And I'll spare you the governance and the legal detail in how pensions are organised. We can go into more depth if you like, but equally Share Action runs a range of training programs and also produces a lot of research online. So if you want to dive into the depths of the differences between different scheme structures in the UK, I can point you in the right direction. In short, schemes are generally coordinated through your employer, unless you're self-employed when you have to sort yourself out. And schemes are either set up for one big company or to cover lots of companies together, what we call a master scheme. What I won't talk about when I'm going into a little bit more depth here is state pensions, NHS, civil service and teachers' pensions, simply because that money is structured separately and it's not invested in the same way. But again, happy to talk about that in more depth separately. Next slide, please. So there are two main powers that pension providers have to achieve impact in the world. On the left, you can see asset allocation, or pizza, and on the right, stewardship. I actually tend to use a pick and mix metaphor for this, but my colleague recently persuaded me that pizzas are a clearer way of talking about this, which I think just goes to show how food-oriented our office conversation normally is. But when making a pizza or making your investments, you start off by choosing what your base is. So what doesn't go in the pizza? What do you not include? What do you screen out is the terminology that we use. And then you choose your toppings. So that's what actively goes on the pizza. What do you target? And that's structured in a whole range of different ways depending on the type of asset that you're looking at. But pension schemes do have a very significant amount of power in how what they choose to target and how they structure it. And I'll go into one sort of slightly more technical point here. So don't worry if this isn't clear to you, and I'm happy to elaborate more later if it's useful. But every scheme will be invested in a range of different asset classes. Those are sort of the different types of vehicle that that you use to finance a project or to exchange different assets. So the ones you're probably familiar with, stocks and shares, that means equity, same thing. Bonds, within that's sort of one topic within a broader area of debt. I won't go into too much sort of financial theory or talk about the nightmare that is derivatives or any of that sort of thing. But what's important to say here is there's a very key distinction between the types of assets that are exchanged publicly, and that means they're on a public exchange, normally a stock exchange. If you think of the London Stock Exchange as by bank, that's probably the most obvious image to put in your head. And once those shares or bonds are traded between people like that, if you sell one of those shares, by definition, somebody else is buying it. And that trading relationship doesn't have any direct connection to the company whose share it is. And that's really important because when you're buying or selling, when you're determining your asset allocation in public markets, so in stocks and shares or in publicly traded bonds, you're not actually changing the access to money that company has. So you're not making it easier for that company to raise capital or making it harder for them to access capital. That's a really big difference to when you're talking about anything in a private or non-secondary market, where you're actively buying something from that company or giving them access to money. So that's a little bit of technical detail, but what's important there is some of the things we talk about in terms of asset allocation might matter for you, but they won't actually shape what happens for the companies at all. Other things matter for you, but also will shape the ability of the companies that you're investing in to get capital or not. And then the second lever that's absolutely critical is stewardship. And where your pension provider owns companies, they have the power to change them. This could be soft or this could be forceful. And we often use the expression tea and biscuits engagement with boards. So investors will often have many meetings in person, by email increasingly, but also these days video call, of course, with the companies that they hold, particularly where they have a larger stake. And as a charity, what we're always looking for in those interactions is evidence that they have a plan to escalate that engagement, so to step it up and ask more or move up the level of their engagement as the company acts or doesn't act, and whether they have milestones built in. So is there any sort of timescale to this? And what's phenomenal is across a whole range of research and a range of different studies, the vast majority of both pension schemes and the asset managers that they use don't tend to use either any escalation structure or any milestones in their engagement. And I put that as a contrast to more what we call more forceful engagement, which some schemes are increasingly conducting. And the example I wanted to give you there is a resolution, so a vote that was filed at Barclays Bank by Share Action and by a whole range of both pension schemes, charities and individuals. So I'm the proud owner of one share in Barclays Bank, which I used to help file this resolution, so put this vote to the board. And this is particularly exciting to me because the AGM is tomorrow. So we're sort of all gearing up to see what will happen. But that resolution is basically asking the bank to commit to ensuring that its fossil fuel financing, so the money it puts out to make sure fossil fuel projects happen, is aligned with the Paris Agreement, which I'm sure you all know. And it's been a very interesting process of engagement with the board over a period of about 5 years. And that's the sort of thing that you should expect your pension funds to get involved with. So if your providers, I think Brunel, Falkirk, which is probably unlikely, or Merseyside, similarly unlikely for a mostly Cambridge-based audience, but also LGPS Central, so the local government pension scheme central pot, then you can commend your manager for having done something pretty impressive in terms of engagement on climate change. And I'll talk a little bit more about Barclays at the end as a really interesting example. But is this either or? Is this asset selection or is this stewardship? Not at all. So you should expect your pension provider to do both of these things. And there are different strategies for different types of company, different investment philosophies, and sort of linking to what Roxanne was saying in the introduction, different theories of change. So whether you focus on what you're holding or how you're engaging with it really depends on your view of the world and how you think change happens. And I'd love to get into that in questions and explore what you all think as well. Next slide, please, Carol. So what world is your money building? Let's get to the reality and the practicalities of the situation at hand. In short, it's really hard to know. Most pension providers are not particularly transparent. There have been some regulatory changes that we've been very involved with that kicked in last October, which are leading to better disclosure, particularly around climate change issues. Next slide, please. And in short, pensions tend to be invested in very large companies and in indexes, which are big lists of companies, again, on the stock exchange. Almost all UK pension schemes will invest in the FTSE 100 index. That's a big UK major index. And this index includes companies such as Shell, BP, HSBC, etc., to answer my question from the beginning. So if you have a pension, there's a very high probability that you're invested in the list of companies on that image on the left. They'll also invest in non-listed companies, in debt, private companies, in infrastructure projects. So Roxanne, with your cycling hat on, one thing to pay attention to definitely is the infrastructure side of things. Pension funds build a huge amount of the infrastructure all around us, heavily involved in that side of things, often with incredibly minimal scrutiny. The attention tends to end up on the public companies because we see them, we understand who they are, they have to disclose more because they're publicly listed, and the other asset classes tend to get forgotten, which can be a real issue. And then on the right, I've just put up a list of the top 10 shareholdings for NES. They're the UK-based pension provider with the most members. It's not the most sort of accurate representation of the field, mostly because they apply what we call a climate tilt to their funds, which means of all the companies they hold, they sort of lean a little bit more towards the climate side of things. And you'll see Apple, Amazon, Facebook, JP Morgan, Samsung in there. So that sort of side of things often. But remember, it's not necessarily a bad thing to hold these companies if your pension provider is being a good steward, and if they're engaging meaningfully with those companies and driving them towards further practice. Next slide, please. So what can you do? Often you can choose a pension that suits you. In general, when you join a new employer, you get placed into their default fund, but you can often choose out of this. Many pension providers will have an ethical option. Sometimes they'll have a Sharia option as well, or a range of other sort of different ethical alternatives. You can often do this online, and actually it's pretty much like switching your energy provider. It's one of those things you put off forever, but actually once you do it, it feels great, and it can have even more impact than going to renewable energy or something like that, simply because of the signals that you're sending to the market. Next slide, please. So on this slide is Nest's ethical fund. So this is actually my pension fund. I'm always happy to speak about it, but it's hopefully the same for some of you, just because they're so widespread. Ethical funds generally have less fossil fuel exposure or none. They generally don't hold any of what we call the sin stocks. So that's a sort of old phrase, and I don't mean it to imply sin, but gambling, pornography, alcohol, that sort of thing. But what's interesting here is you see a lot of chemical, tech, communications companies, some of which you might struggle with for a range of sort of ethical or social justice issues, although I'm wary of questioning the ascendancy of tech within a Cambridgey crowd. It's quite common that ethical funds tend to be very tech heavy though, and we put out a paper recently called Do Androids Dream of Responsible Investment, which aims to sort of unpack some of those challenges and concerns around the tech sector and what investors can be doing about it, and pension savers as well. But all of this can leave us feeling a bit disheartened. Ultimately, we don't have as much control over our pension savings as we'd like to. If you look at this list, really, where are the wind turbines? Where are the social housing projects? Where are all the lovely things you'd love to be investing in? But there is some logic to the situation being as it is. In essence, the scheme is trying to prepare you for retirement, and the sort of mainstream agreed way to do this is to invest in large and very safe companies. There are only so many of those, and the vast majority of them have quite complex ethical profiles. As I've said before, whatever your pension scheme owns, they can be engaging with it, and the forcefulness with which they engage could have a huge impact on the operations of that company, obviously depending on the sector, what they're asking for, and where they're trying to get in. It's generally a bit of a lost cause to try to persuade, for example, a weapons company to stop producing weapons, but there are ways you can engage with companies which can have very positive impacts. I think it's also worth saying, just as I sort of move to a close, that the investment sector is on a journey, and lots of people are pushing, and this does help. We've been really struck by the regulatory shifts over the last year that are driving pension schemes to disclose more, to do more around climate, to take climate risk seriously in particular. And even if it's not perfect, this is a step towards aligning your money with your values. It sends a signal. It might well improve your conscience as well. But as I say, there's always a challenge around the access to capital that the underlying companies have. And if you're thinking about switching, obviously consider your appetite for risk, the costs, the performance of the fund, your own age. There's a whole range of features, and as Roxanne said, we're not in the business of giving investment advice, so do seek that out independently yourself. And the final slide, please, Carol. So I thought I'd just flag a few other things that you can do. You can speak about your pension in your workplace. It is your employer who has the keys and the control over the options. They can often bring in a range of other ethical fund alternatives. We produce rankings every few years of who's doing a good job within pension schemes as well, which could well be useful. At the moment, you can email your MP about the pensions bill that's currently just wrapping up in the House of Lords. It's in a really interesting place, and there have been a few good suggested amendments to it. So it's a really critical moment to engage and to get MPs thinking about the ethical implications of the pensions industry. As I mentioned, look up how your scheme voted on the Barclays resolution. That'll be out over the next few days with the AGM tomorrow. If they didn't support it, ask them why not. It's a hugely powerful lever at the moment, and it's sort of increasingly being seen as a landmark resolution for this season. You can attend a company AGM. That's another programme of work we do, and a really exciting opportunity to engage directly with corporates, ask them questions of concern to you personally or professionally. And finally, we coordinate an annual rolling calendar of events and opportunities around pension power. So please do get involved with that if you're keen to hear more. Thanks so much.
Thank you, Lily. That was actually so amazing, and I learned so much. My brain is already whizzing around wondering, what is my pension actually doing? Am I paying for road building projects that I'm campaigning against at the same time? I don't even know. So I will definitely be having some chats with my pension provider. But what I think we'll do is save up the questions until both of our speakers have shared their insights, because then we can have more of a conversation with both Lily and Toyin, and see where it takes us. But let's keep to schedule, and I will now hand over to Toyin, our Senior Relationship Manager from Triodos Bank. Toyin.
Hi Roxanne, and thank you for having me today. It's great to have the opportunity to speak with the Impact Women's Network. As Roxanne said, I'm a Senior Relationship Manager at Triodos Bank. I've been with the organisation just over 6 months now, and prior to that had worked in a couple of social investment funds. So social finance has kind of been part and parcel of my life for the last 5 years. But like a lot of my colleagues, I did start out in mainstream banking, but ultimately got disillusioned and felt that really with the skills and the experience that I wanted, but ultimately the impact that I wanted to achieve, it was really around making sure finance had a positive impact on society and the community as well. So today I'm going to, sorry, I'm supposed to have control, it's not working. Okay, sorry. We did test this, but it
might have a bit of a delay. Perhaps if Carol moves the slides on for you.
So, Carol, if we can go back to the first slide, please. You should have control back now. Sorry about this. Great. So yeah, today I want to really just give an introduction to who Triodos Bank are. Some of you may have heard of us in passing or may know a lot about us. Others, it might be the first time you've heard about us. So if we move on to the next slide, please, Carol. So Triodos Bank was established originally in the Netherlands in 1980, and it really focused, the aim and the focus of the organisation was having a positive, sustainable approach to society and to the community, and really focusing on how finance played a part in that. In terms of our position in the UK, we have been established here since 1995. So this year we're actually celebrating 25 years, although some of our celebrations now have been delayed in light of the pandemic, and rightly so, but we hopefully you will see more about our history and what we've achieved in our first 25 years in the UK later in the year. So as this slide says, in terms of our mission, it really is around focusing on creating a society that protects and promotes quality of life for human dignity and also for communities as well. Next slide, please, Carol. If we can go on to the next slide. Great, thank you. So as I mentioned earlier, our priority is around making money work for positive change. And we do that really in focusing on 3 key areas, one being environment. So a lot of people who have heard of Triodos know us as being probably one of the first, if not one of the largest lenders and financiers of sustainable energy and renewable energy in the UK. And we really look to push this, linking it back to our mission, but also to the values and what we think finance should be used for. Culture as well is also a really big focus for us. So we are very much engaged in supporting cultural society, but both in the sense of the growth and establishment of it, but also the access to it for all individuals as well. And finally, we really focus on the social element. So this really is the work we do with charities, social enterprises, and socially minded organisations. If they align to our values in terms of the activities they undertake, they are very much organisations that we wish to work with and support. If we move on to the next slide. So, I mean, the next slide will, once it pops up, yes, will just show kind of our position in Europe. So we are a European bank. Across Europe, as you can see, we have over 700,000 customers. We manage almost 18 billion in funds across fund management. Fund management is not something we do or have a large part of in the UK, but our European counterparts do a large part of that. And in terms of businesses that we support across Europe, we're now heading towards 6,000 of those. If we move on to the next slide. So going back to our mission and our focus that I mentioned previously, our values really focus on 4 key areas. The first being entrepreneurship. Entrepreneurship in the sense of supporting entrepreneurs who are socially minded and really looking to make a difference in how they operate as an organisation. But also entrepreneurship for Triodos itself. So how can we be innovating what finance can do? How can it make even more of a positive impact in the communities that we operate in? Similarly, with excellence, we really want the best for the bank and for our customers, but we also use the platform that we have to raise greater awareness of our peers in the financial sector, and to really encourage them to do a lot more to I suppose, move more to a more sustainable approach to finance as opposed to being merely shareholder-led. We benefit from the fact that we don't have shareholders. Our customers ultimately are the individuals that come to our AGMs and will hold us accountable and challenge us in terms of what we're doing. And that really links back to the next 2 values. So sustainability, very much so looking at how finance can be used in the right way and in a sustainable way for society, thinking about the impact that we have now and what it means for future generations as well. And finally, transparency. This is a really key one for us. If you visit our website, we have a page called Know Where Your Money Goes. So for any of our customers that hold funds with us, they can access this website and see exactly who we lend our money to and what that finance is used for as well. If we move on to the next slide. So as a socially minded and environmentally focused lender, we've signed up and become member founders for a couple of alliances and networks, the first being the Global Alliance for Banking on Values. And this is one we're really proud of as we were a founding member. There are a number of members across the globe who manage or look after over 50 million customers. So we see this as, again, linking back to what I said earlier, a platform where we can make a real difference both in the UK but also to our colleagues and friends across the globe as well. And linked to that, we are also a member of the UN Principles for Responsible Banking, and this really aligns to everything that we do day to day. Next slide, please. And in terms of the activities of what we do and the transparency of how we act, this has been really measured and is highlighted in the accreditations and awards that we have. So we are a certified B Corporation, which means that we very much focus on making a positive difference in the products and the services that we offer. We've recently been awarded the Queen's Award in 2020 for sustainable development. We also have been successful in the British Banking Awards in terms of both customer service and the products that we provide. And for us, whilst we don't necessarily strive for these accreditations, we do see it as a marker of the good that we're doing and also the fact that we can very much do a lot more. If we move on to the next slide. So this slide really is just to highlight the key impact themes, and this is linked to Triodos UK strategy for between 2019 and 2021. Our focus is around these 3 key areas. So social inclusion, and this really is quite a broad area, but links quite closely to a lot of the work that we do, in particular with charities and those who support the communities around them. And I suppose in light of the pandemic and the lockdown and what is going on now, we really wish to highlight and support these organisations more than ever. Energy and climate change continues to be a priority for us as well. This is not something that's going away, and actually it's been really encouraging to see how it's become a stronger part of the agenda and the discussions around the world in the last couple of years. And we very much want to leverage this and really continue to build upon what Triodos has done previously, but again, what our peers in the sector can do as well. And finally, food and agriculture. Again, probably linked very much so to energy and climate change. Food and agriculture is a key area for all of us. I mean, ultimately, we all need to rely upon that as well. And sorry, we moved ahead. So the next slide is just it's a quick illustration of how Triodos works as an organisation. So as I touched on earlier, all of the funds that we lend out are based on the deposits that our customers give to us. So as a retail customer, you have the ability to hold products with us, deposit your funds with us. And what this slide shows really over the last few years is the percentage of that which is then on lent to our business and charitable customers as well. And we really look to sort of really push and grow that percentage. I don't have the figures for 2019 as yet, but as you can see, by 2018, we're around 82% ratio. So hopefully we can increase that further. Okay, so if we move on to the next slide. Okay, so the next few slides really are to illustrate some of the products and services that Triodos has. There's a number of slides and also some case studies that I've included. I may not get through all of those this morning, but I have provided a copy of this presentation to Faye and to the team as well. So hopefully this can be circulated to you afterwards. Again, just to repeat the disclaimer that's been mentioned by some of my colleagues, this is very much for information only. We do encourage you always to seek your own financial advice, but hopefully it will give you an insight into what Triodos can offer compared to traditional mainstream lenders. So as this slide highlights, we provide products both for individuals in the form of current accounts and savings, and also personal investments. And also we provide loans to organisations. We also provide banking services as well. As of 2019, we had over 61,000 customers in the UK, which has really grown for us in the last 25 years, but more so in the last sort of 3 to 5 years as well. We can move on to the next slide. Okay, so the first slide really is just to highlight our personal current account. We launched this a few years back and we've really seen an uptake in this, which to us highlights an awareness amongst the individuals across the UK who are looking for another option in terms of their banking services and their day-to-day banking. It works just like any current account would for any high street lender. We do have a small fee that we charge, but you have the benefit of knowing that the account and what happens in terms of your funds is transparent and also focuses on ethical and sustainable measures. If we move on. I think the slides are going to probably move through a bit slowly, so they might be slightly out of sync, but I'm probably going to canter through the next few slides. So we offer savings account in the form of traditional ISAs and fixed term accounts as well. We also have an investment platform for our customers, and linked to that, we also launched our own crowdfunding platform at Triodos as well. And this in particular has really supported a lot of the work we do with business lending to sociable organisations. So we have provided a number of loans to various organisations, and our crowdfunding and corporate finance team are able to do fundraisers between £250,000 all the way up to £10 million for customers. And much of this can be found on our crowdfunding platform on the website as well. If we move on in the slides, we will come to a slide around sort of the business accounts that we also offer. So just like our current accounts, we also provide services for charities, social enterprises and businesses in the UK. And again, like our mainstream borrowers, it does provide day-to-day banking services and also deposit accounts and savings. And the next slide will also show kind of what my role is and the position that I have, which is within our business banking department. So this department really focuses on our lending to our sort of business and charity customers, and that might be for various reasons: projects, capital, working capital, sorry, or also just to support them in terms of their day-to-day finance needs. We typically provide loans between £100,000 to £20 million, and we are based across the UK. Our core base is in Bristol, but I'm based in London, and we have an office in Edinburgh and colleagues in York as well. So I am, in terms of the next few slides, it's case studies in particular that I wanted to highlight to you. I'll probably only go through the first couple, but the first one I really wanted to raise was around Berwickshire Housing Association. This is one of my favourite case studies of Triodos Finance that we have provided, really because of the impact that this project has achieved. So it is a housing association based in Scotland, and we provided a loan of over £12 million to really support them, both in terms of developing 500 homes over the next 25 years, but also by establishing a wind farm, which meant that those homes remained affordable and sustainable for the individuals that lived there as well. The next slide also gives an example of a customer we supported through our crowdfunding platform. So Thera Trust is an organisation that they operate across the UK and provide learning disability services and support for individuals and families. We've supported them with a number of bond issues and raises on our crowdfunding platform, as the slide will show. And it really has enabled them to grow the homes that they've been able to acquire to support their client and customer base as well. I'm going to stop there in terms of the case studies. There are a few more, but I will leave you to read those once you get the slide pack. Right at the end of the slides are my contact details, and also the contact details for Triodos as well. Please do visit our website. There is a lot more information on there, but I will hand back to Roxanne now just to start.